Hello and welcome to our webinar on helping Cardiff workers to come back stronger. This is a guide to supporting financial wellbeing in the post-lockdown workplace for business owners, employers and HR leads. The session today is being presented by myself, Leanne Herberg, the Chief Executive of Cardiff and Vale Credit Union, and Soraka Kennedy, who's the founder and director of the local social enterprise Money Saviour, which provides in-house money and debt services. The session today is going to help managers and employers understand some of the current financial challenges likely to be affecting the staff at the moment and in coming months. It's also intended to help you understand the link between financial worries and poor mental health and how that affects productivity for staff. Know how to signpost staff if you need to, and understand how you can support staff in building resilience to unexpected financial shocks. And that includes providing access to the ability to help your staff to save regularly and to access affordable finance if needed. Just want to have a look at this slide just to give you some context for this session. Prior to the current COVID crisis, 15.5% of Welsh adults were already indebted before the current crisis. So that's not just people who have credit, it's people who are over indebted. So it's already a significant issue. The average household savings was estimated in Wales to be just 875, which clearly for most people isn't enough to confidently cover any significant financial shocks. Worryingly, Cardiff was identified in a publication last year that highlighted that the city was number 9 in top 10 of hotspots for payday lending in the UK. So in just 1 year, over 74,000 payday loans were taken out by local people with a value of around 11.4 million. That's just 1 year. So that was pre-COVID. Some of the issues that are facing local workers now, obviously a number of employees are on reduced income. For some that's because they've been furloughed or maybe related to working reduced hours. There's also many local people are, even if they haven't been affected directly, they will be affected indirectly if their partner has been furloughed or has suffered a reduction of income. So research by the Resolution Foundation that was released last week showed that staff in industries that have mostly been affected by lockdown are typically the same people who've got less savings to fall back on, and they're more likely to have to access high cost credit such as payday loans or overdrafts to get them through the current crisis. On the other side, we do have many local workers who are able to work from home and therefore have been able to save more during the crisis because their outgoings have reduced in terms of reduced parking and travel costs, etc. So we understand today that the crisis has affected people in different ways. I'm going to hand you over to Soraka now to cover what is financial wellbeing and take us through some further slides.
Yes, thank you, Leanne. I thought it might be helpful just to start off, just to explain a little bit about what financial wellbeing is. And financial wellbeing has been a bit of a buzzword over the past couple of years, with employers really starting to recognise the value of providing services for staff. So when we talk about financial wellbeing, we talk about people having, it's a state really, a confidence with someone with money to meet their current and future obligations. So knowing they have enough in the bank to meet maybe their debt payments, to pay their pension, so to future-proof finances as well. It's about feeling secure about your financial future and the ability to cope with shocks. And I think that's obviously been a very big thing under COVID-19 now. The fact that we see people that have been historically good at finance and saving money, maybe still even those having to take stock of their spending, maybe having to look at budgeting, maybe having to look at taking payment holidays and not having money going forward to meet their basic needs, really, which is the other side of it. And when we're looking at what is financial well-being, it's also about the ability to make choices to live the life the way that you want to. So for example, if you haven't got money and you can't put food on the table, then it's very unlikely that you would be able to meet future goals for things. So it's about trying to, as I say, deal with finance as it is now and try and future-proof for things that come up in the future. So as I say, it's been very important over the past couple of years, but much more so now going forward, especially as the incomes have really been hit. So that's a little general overview to it. What I wanted to cover next is just to have a look at some of the emergency measures that have been introduced by the government and the credit industry as a response to COVID. I have a list up on screen, and I think that some people will be familiar with most of these, but it's just to run through. So the first one I wanted to talk about is the Coronavirus Job Retention Scheme, which most employers and employees are now probably aware of, with most employers having to have taken advantage of this. So this is the furlough scheme, and this is the government scheme where a proportion of employees' wages are covered by the government. At the moment, it's up to 80%. That figure is going to be changing, and eventually it will be phased out by the end of the year. They're thinking about October time. And it's really a worry then with staff, with redundancy as to what's going to happen when that money runs out if the economy doesn't get back to normal. So that was the furlough. There's also the self-employed income support scheme, which was available for self-employed traders. This was subject to criteria. There were quite a lot of self-employed that actually didn't meet the criteria for this, that maybe had not been trading for long enough, or maybe hadn't got sufficient accounts in to show that they would have a substantial sum from it. The first round of the self-employed income support scheme has been given. You still have until the end of July to get your claim in. There will be one more round of this funding, and that funding then will be over in August. Businesses were also invited, subject to criteria, to apply for a business interruption loan scheme and also a coronavirus future fund. Both of these loans up to 5 million, again, based on criteria. But as a money advisor, the one I probably saw the most of and more people qualifying for was the bounce back loan scheme. So the bounce back loan scheme was available for companies and also self-employed traders. And this was available via banks. And to qualify for this, I mean, it was actually very limited qualifying criteria. It was quite immediate access to funds, and it was 25% of turnover up to a maximum of 50,000. So under the bounce back loan scheme, which was not for individuals, it was businesses or self-employed, it would be interest and payment free for the first year. And after the first year, 6-year repayment term with a 2.5% interest rate per annum. So there's quite a lot of different schemes to try and cover people for when they lost income. There were still quite a few gaps that were filled with it, but as I say, those were the main ones. As well as the government scheme, the Financial Conduct Authority, who were the governing body for all banks and financial institutions, also brought in directives to help consumers. And some of these, I'll run through the more popular one. So the first one was bank overdrafts. So under overdraft legislation, which was actually changing on the 1st of April, whereas overdrafts were no longer allowed to charge daily or monthly interest rates or fees, it was all moving to an annual percentage rate. But under coronavirus now, if someone is struggling with an overdraft, they are allowed to approach the bank to see if they can have the first £500 interest free, usually for a 3-month period. Also, if someone didn't have an overdraft, they were allowed to apply for one, so for new credit, but that would be subject to terms and conditions. Alongside that, then the FCA also have issued directives to say that with personal loans, credit cards and catalogues, people were allowed to apply for a no questions asked 3-month holiday, payment holiday. Shouldn't affect the credit file with this one. But what's being said now is that from the end of July, the window for that 3-month payment holiday will stop. And then banks, building societies will be looking at maybe affordability checks to see if people can pay something rather than nothing. And anything, if you break the terms of your contract and pay less than your payment, that would then affect credit rating. One thing I wanted to mention on that is that the personal loans, credit cards and catalogues are 3 months, but for the payday lenders, which we talked about a little bit earlier on, there's actually only a 1 month payment holiday for that. But as a money advisor, what we found is if people communicate with their lenders, then they tend to be pretty reasonable at stopping interest or allowing these payment holidays. So for mortgages, it was the same. Most mortgage lenders, if someone had been affected by COVID, were again granting the 3 month payment holiday. All of these concessions, though, will be coming to an end, and the payment holidays will be looked at as more of an affordability basis, which again could affect contracts. The other point on here is about enforcement agents, bailiffs. So since the start of COVID, bailiffs have not been allowed to visit, they've not been allowed to collect debt. So for a lot of people, that's been welcome relief. The most common actions that a bailiff would be collecting from would be council tax arrears, maybe parking fines. Now they're actually allowed to start visiting again from the 23rd of August. So I think it's going to really impact. I mean, all of these changes, when the furlough is ending and when the grants are running out and these payment holidays are being lifted, are all coming at the same time or not far off each other. So it's going to be quite difficult, I think. So people really need to access help and support for it. I just wanted to run a little bit about what individuals can do. So I'm a specialist debt and money advisor, and these are the steps that we would take if someone was presenting with financial difficulty or with an income shock, so a redundancy or a drop in income. So the first thing that we advise people to do is draw up a budget. And the best way to do that is to get your bank statements, any pay slips, any evidence of income that you can find. So list your income and then list all of your outgoings. So everything that is currently being paid out. What we would have a look at then is income maximisation. So having a look to see if there was any other maybe in-work benefit entitlement that you could claim. So a common one for that would be tax credits. So if you are in receipt of tax credits, maybe having a look to increase the amount that you're getting. It was very common on all of the websites as well for people being told to just go and claim universal credit if their income had dropped down. But it's really important people are aware that by claiming universal credit, it could end another benefit. So if someone's in receipt of tax credits and they claim universal credit, that will effectively stop their tax credit claim. So things like that are very important, but trying to make the most of the income that you've got. What we look at then is expenditure reduction. So it's very important that someone puts in order of priority the amount that they're paying out. So your rent and your mortgage payment should always come first. Again, it could be that you look at getting payment holidays on those. Things like your council tax is important, your gas, your electricity, any car hire purchase, travel costs, all of those things. So we look at a pecking order of things that need to be paid. If someone is really struggling, then there are certain payments that may be classed as non-essential that you could look to reduce. This could be maybe a mobile phone contract or Sky, a gym membership that's not being used. But we do advise people to check the terms of their contract just to make sure there's no penalties in that they wouldn't have to carry on paying until the end of that contract anyway. And a couple of important points at the end with it. If you're looking at your household budget and it turns out at the end of it you have lots of money left over, you have a positive budget, that could be that you haven't put enough provision in for maybe food and housekeeping, or maybe you haven't put your travel costs in but you're going back to work, so those costs will then kick in again. If after all of that, though, you do have a positive budget, then you could maybe look at doing things like paying off debt with it. You could look at increasing maybe a pension contribution, or you could look at putting that into savings, which again will help to future-proof finances. The flip side of that, though, is if when we're looking at someone's income and expenditure, or you're doing it yourself and you have a negative budget, so even after reductions that you've made and even after additional income that you've sourced, you have a deficit budget, what we look at then is the fact that you might need some help. You might need some debt advice. You might need some help from someone just to try and show you budgeting and to try and bridge that gap. And at the end of the presentation, on the last slide, we do have some organisations that would be able to help with that. As I said before, financial wellbeing has been a hot topic for quite a while, and I think employers have realised there's been lots of studies available about the link between productivity and someone's financial well-being. Many weighs heavy, many can cause mental health problems, which could then have a knock-on effect of someone taking time off work maybe to try and deal with their issues, and it's a leading cause of stress in the workplace. So the things that we think were important for employers to do is really embed financial well-being and take this opportunity where there's been such big changes to staff and staffing to have a look at making sure that the financial well-being strategy is really sound, robust and embedded. I also think it's important to train key staff as well, because when we're talking about financial well-being and when we talk about the debt side of things and someone not having money to pay their basic household needs, there's a lot of emotion that can go with that. People can have a fear of judgment. There could be, just a fear of stigma of debt. So I think it's very important that staff within maybe HR teams are quick to deal with this and not to give advice themselves, but to know where to signpost and know how to help. I also think it's very important that employers provide accessible and clear information. So maybe having information on money strategies, money help, about budgeting. I know that there's lots of organisations that provide that, Money Advice and Pension Service and some other companies that do financial well-being. But just having something cleared so someone can go away and have a look and find these things out for themselves. And what I think is also very important is that it can be very hard for someone to navigate their money journey by themselves. So sending someone off to go and do their own budget or to try and make contact with creditors when they're a bit embarrassed or stressed about things can also be very difficult. So having a look at partnering with specialist agencies or signposting, so specialist debt advice agencies that can take on cases for people and can act on their behalf. And the last thing as well is to say, when we're looking at financial well-being, one of the clear areas of it is accessing affordable credit. So making sure that there's payroll schemes in-house so that people have got that access and they can get into good financial habits.
Okay, that leads us nicely on to our payroll savings and loan scheme at Cardiff and Vale Credit Union. We are a credit union based in Cardiff. We're just about to open a new branch in the city centre in Working Street. We've got just over 9,000 adult members, and around half of our members come through a payroll scheme partnership with over 40 employers that we work with locally to let staff access the ability to save directly from their salary. So they decide how much they want to save and have deducted from their salary each month, and then that will come out automatically, arranged by the employer and transferred over to us to have in their savings account with us. For those who need to access affordable finance, they apply to us directly, and if they are allocated a loan, then again they're able to repay that through their salary. In terms of the next slide there, just gives you an idea of some of the partners we work with. So we work across the public, private and third sector employers. Got very large employers such as Cardiff Council, who've got nearly 2,000 of their employees as our members, are saving regularly with us, down to small local housing association, chapter arts, that might just have a small number of their staff saving with us. So we're open and free to have partnerships with all different types of employers across Cardiff. This slide here just outlines some of the benefits to employees in employers working with us to allow their staff to have access to these payroll schemes. makes it really easy and convenient for people to save without having to think about it. So employees would join us directly, become members, decide how much they want to save, and then it's taken out of their hands. They don't have to think about it every month, and their preference in terms of the value has come over to us and is in their savings account for them. And as we mentioned, it does allow access to affordable loans, and it can help people. It addresses the issue in terms of dependence on high interest lending that some employees are vulnerable to. Encourages that wider financial health and a savings culture. So though many of our members haven't saved before, but by joining the payroll scheme, that they developed just a habit of saving without thinking about it. Our focus is on responsible lending. Last year, we became the first Wales-based financial services provider to be awarded the 5-star Fair Banking Foundation accreditation for our personal loans. And it's very much the focus of us as a not-for-profit financial services cooperative that we lend to people responsibly. For those who are saving regularly with us, there's an annual dividend to members. There's also an exclusive perk of life insurance, which is free for our members, which is attached to loans and savings up to £5,000. Saving with us through either directly or through a payroll scheme, the savings up to £85,000 is protected in exactly the same way as savings deposited with a bank or a building society by the Financial Services Compensation Scheme. There's also other benefits that members can access. We have a specific Christmas saver account to help people spread the cost of Christmas throughout the year. We offer prepaid debit cards in partnership with a prepaid debit card provider. We also offer discounted promotional loans throughout the year. It's also that added value of saving with us or borrowing from us that employees often feel that they are contributing to the local economy. It's keeping money local and helping colleagues, family and friends in Cardiff and Vale of Glamorgan in terms of recycling money, in terms of savings and loans. So in terms of the benefits for you as employers or managers, this is a unique employee perk which can be part of a wider financial or benefits package you have for your existing or future staff. The service is free to employer partners. We've never charged partners for this service, and it is easy to establish and administer. I appreciate that I would say that. So what we always say to new partners who are considering partnering with us is that we'll put you in touch with one of our existing partners, another local employer, and you can talk directly to their HR staff and their payroll staff to hear directly from them how easy it is. There's no liability for employer partners in terms of any loans that their employees might take out. The only expectation is that the money is transferred to us monthly, along with a spreadsheet just detailing the employees and the value of their deductions. And finally, then, the benefit to employees obviously is demonstrating that corporate social responsibility and commitment to employees and their financial health, and supporting them to recover from the impact of COVID. While our attentions at the moment are on firefighting in terms of getting businesses back up and running, the recovery period for people financially, for many people, is going to take months or even years to recover from what's happened over the last few months. And it's important that employers understand that there are ways that you can help that don't cost any money, and that can really contribute to people getting onto a better path in terms of financial well-being. So that's it from us in terms of what we wanted to present today. Obviously, it's just an overview. Soraka mentioned earlier that there's free services available that you can access, or you could have on your website to if staff do come to you and you're looking to direct them in the right place in terms of getting more specialist advice. We have got locally, we've got Cardiff and Vale, CAB, Step Change, Money and Pension Service do a great website with lots of information that's really helpful. And also we've included the details on this slide of Mind Cymru, just reflecting that there is a mental health impact to all of this in terms of financial worry, not just through this period, but any period where people are struggling financially. We just like to make the point as well that the organisations that you see in front of you are free to access for your staff. There are organisations out there that will charge people for debt advice or to pursue a particular debt remedy. These organisations will give free advice and ethical advice and make sure that people are getting the right support that they need and the right solutions that's correct for them. Is there anything you wanted to add into that, Soraka?
No, I think that's fine. As I say, it's just also to bear in mind that these agencies might be quite difficult to get hold of for a while, just because the demand for debt and money advice is just obviously very much spiked at the moment.
Yeah, I think most of them have got quite detailed information on their website at the moment, specifically around COVID, haven't they? And trying to help people directly through their websites.
Yeah.
Okay, in terms of what you've heard today, as I said, it's only an overview. If you'd like to get in touch with either Soraka or myself, our details are on the screen there. If you'd like to get in touch with me to find out more about our payroll savings schemes, then the details are on your screen now. If you want to email us and put it for my attention, we'll come back to you and have a discussion and explain more about what we offer. And then Soraka, if you could say more about what you could potentially do to help employers.
Yeah, sure. So MoneySaver is a social enterprise. I set it up in 2011 and it's to provide instant access to debt and money advice, so in-house services, only available business to business, so I can't advise members of the public because I don't charge. As I say, it is a business to business service, but I deal with local authorities, landlords, companies, just providing, as I say, as an employee perk, in-house money and debt advice. So yeah, if anyone wants any discussion on that, then please email or contact me on the number on the slide.
Thanks very much, Soraka. So that brings our session to an end. We hope that you have found it useful and that there are things that we've covered today that you can take away which will support your staff in terms of the months ahead and our collective recovery. Thank you very much for listening.
Thank you.